me ask you though, from a wealth manager's perspective, there are some who won't touch private real estate, right? Because look, I don't want to put words into your mouth, Paul. You're the expert. That's why you're here. I want to ask you, but with publicly traded real estate stocks like REITs, etc., there are analyst reports. You can look at detailed analytics, whereas the private side, you don't have that advantage. So what is the resistance typically that you think RIAs and wealth managers have to private real estate versus publicly traded real estate?
Yeah, it's a good question, Adam, and it should be something taken seriously. We always want to talk about risks first. And there's something called blue sky laws, if you've heard of those. And you can imagine once upon a time, someone swindling people with snake oil that would cure your COVID-19, right? Or whatever, the Spanish flu at the time, So you can imagine there are all these terrible things that happen. That's why we have blue sky laws. That's why my industry is the most regulated industry in the world. And it needs to be, because there are scams. So there's been a lot of private scams, not just real estate, but anything, venture capital, private equity, you name it. And Europe is much more conservative than the United States. They tend to be debt only. In the United States, we're more aggressive. We tend to look at equity more aggressively. Now, Europe's doing that too now, but traditionally Europe was debt only. The United States brought this equity idea to the manifold in a very aggressive way. So Americans were very aggressive about equity and taking risk, but it's important to know that there is risk. Now, how do you mitigate that would be the question. So really, it's about the managers. Who are the managers? And when I was a venture capitalist, it's real estate's location, location, location. Private investing is people, people, people. Because great idea, bad managers, it's gone, okay? You are looking at the strength and reliability of people. Are these people prudent? Are they putting the interests of the investor in front of themselves? What kind of terms do they have in their contract? So it really takes experts, and that's what we do as generalists, as we go to those experts, and we've become somewhat of an expert in real estate and other fields like biotech, and just by the fact that we've been doing it for a long time. But you want someone who's a fiduciary. You want the fiduciary to do good channel checks with their suppliers. You want customer referrals. You want interviews with the managers. You want to believe those people. I mean, it's just like you interviewed me, but we pre-interview to make sure Paul's a normal guy, right? So it's the same thing. I call them and I see, who are these people? What are they like? Are they people that I would trust? Are they people that I would let in my house? Are they people that I would let play with my children? I mean, there's these kinds of thoughts you have, and if this, on a scale of 1 to 10, the person is a 0 out of 10, should you be doing business with that person? So I think some of that is very good diligence you can still do. There is more scrutiny of the private side today than there was even 20 years ago, because there are organizations, there's angel investor groups, there's a lot of social networking, there's a lot of experts who can communicate with each other faster, better, cheaper today than even 10 years ago. And so, yes, but it is a risk, but I'd say that's the same for any private investor.